There are loads of urban myths and rumors that we're going to disprove in today's video. Some traders have even gone as far as saying, don't even worry about timing the top. Just get a 4 or 5x return on your portfolio and throw in the towel and let everybody else have the rest. In this video, we're going to provide you disruptive information that shows a trading method and skill set that will time the market top with impunity. Starting out by disproving the most common misconception. 450 days after the Bitcoin halving, that's when the bull run peaked. Now, this may have been true for the past 2 cycles. That would mean in November of 2021, the market's peaked out because, oh, there you go. It's 450 days after the Bitcoin halving. Everybody knows it's time to sell now. The supply and demand metrics has changed. The buyers are satiated, and now it's going to sell off. That's nonsense. That's gobbledygook, and I'm about to prove to you why. In November 4th, of 2021, Powell came out in an official FOMC meeting. And instead of doing rate cuts like we're all waiting for and just happened in September of last year and quantitative easing, they just reduced quantitative tightening in an official FOMC document on April 9th. Instead of taking 25 billion out of circulation, they shifted to only 5 billion. That's pretty bullish. Right on November 4th, they started quantitative tightening, flipping from quantitative easing. So it's the most bearish thing possible. That is what caused the downside. The fact that it pairs with 450 days after the Bitcoin halving is 100% based on Satoshi's design of Bitcoin. This is a 4-year cycle as well. It dates back to 1968, before there was a home computer. It shows the depegging of the dollar from gold and how fiat banking systems push liquidity into the economy to build the economies up and then take it back out to fight inflation. Bitcoin was designed around this with its halving mechanism parallel to absorb this liquidity when the Fed's pushing it out. It's just a coincidence that it works in sync. The only way to understand when the Fed's going to slow this down is by looking at their official documents. Just on Wednesday, they released an FOMC Minutes. Inside their balance sheet projections, that means quantitative tightening and quantitative easing. They will be done with quantitative tightening, ready to switch to quantitative easing as late as February of 2026. Back when Signature Bank and all those regional banks in California were having liquidity issues in 2023, the central banks had to do 30 days of quantitative easing, which is a lagging catalyst causing upside in the altcoin market. Prior cycle, as soon as lockdown hits, the Fed goes full blast with quantitative easing and rate cuts. This is what's causing the bull run. It's got nothing to do with the Bitcoin halving. As we zoom in to these documents, we get massive insight into when the market's going to start running even harder. After the FOMC minutes, there was this PPI data. Knowing that the projections were coming in a bit high, we created a sliding scale for what the numbers would be the next day and how it would affect crypto, a whole different range. Surprisingly, we got a super low score. It was a surprise beat to the downside. Therefore, we hit the #1 sliding scale, very bullish, hitting our target trade plans on Rect, Arrow, and Caspa, all of which have seen substantial upside. Rect, one of the top performing altcoins right now, it's absolutely moving parabolically. Since our trading plan for it at 4.3, it's already up at 5.6. And this type of parabolic cup and handle price action continues to rip for a significant time, in my opinion. Not a financial advisor. None of this is financial advice. Therefore, the only way to know when the market's going to top, like it just did in January 28th, December 18th, that's an even better example. The FOMC releases a dot plot. That's an official document. Unless you're tracking everything the central bank does, you're going to miss all this stuff. They say, oh, we were planning on doing 4 rate cuts. We reduced it to 2. That's massive selling pressure. Right here, there's a Bank of Japan carry trade. They're officially announcing they're reducing the rate cuts here at this meeting. All of this downside pressure, all of this. We have an ebook showing how we sold these tops already. May 15th, the Fed comes out in a speech and they decide they're going to start changing the inflation policy. This is extremely bearish, another trigger for market downside. Now we're in the free and clear. Now everything's ripping to the upside. But along the way, in order to understand how big this bull run's going to be and how long it's going to last, when to take your chips down, when to add more on, when to do a leverage trade, we were able to get in on Ethereum during the PPI data right around the $3,100 range, and Aerodrome on CPI 3 days earlier. That leverage trade already doubled up, getting ready to triple up, and it's running still. This is the skill set on how to time the market. Without central bank knowledge, you are trading in the dark. To analyze all the macroeconomic data, you're talking a minimum 10 to 15 hours a week. Going over the FOMC minutes, we've got tons of guys in our group who have a deep understanding of this macroeconomics and how it affects crypto. They joined the group to hire me to do paperwork for them, building a team around them. Once you've analyzed all these macroeconomic data, now you've got to go through and back test it onto each chart, looking for historic patterns that will clue us into when institutional investors are likely to pull the trigger. A great example of this is with Say. Say had a history of running during FOMC minutes, and if it's running during an FOMC meeting, therefore the minutes officially documenting the meeting, it's definitely going to run. So back at 22 cents, we had a breakout alert at Say projecting at this FOMC minutes on the 9th, Say was going to have significant upside. We did the exact same tactic with Aerodrome at 54 cents. Every time Aerodrome has a labor market data, and the price is substantially below the 50-day moving average, it has a strong rally to the upside. Aerodrome doubled up off this breakout. And that's the technique that we are using with Rect, with the Ethereum level trade, and all the spot positions we have right now. Looking forward, there are more macroeconomic events about to unfold, more potential leverage trade entries, and more importantly, more details and understanding for the duration and magnitude of this up and coming bull run. There's a free link in the description to show how we sold the market tops back here on January 28th and again on May 15th, giving investors an opportunity to reposition. This has been a pretty tight ranged market so far. Hopefully, the central bank is getting ready to really step on the gas and start adding liquidity, thus creating the upside we've all been waiting for. Based on our reading of the FOMC minutes, it's this balance sheet projections we were talking about earlier. At the latest February, that's when they're going to start quantitative easing. That's when things are really going to start picking up. Meanwhile, economists around the world are projecting similar price targets with more rate cuts and quantitative easing happening in 2026. This notion of 450 days after the Bitcoin halving, that's old, and you now know it's not true. All the information that we talked about today is completely disruptive to the methods the majority of traders are using. As we mentioned earlier, a lot of guys are just saying, once I get 4 or 5x, that's it. I've made enough money. You guys can have the rest. We don't roll like that. We're looking to do what we do to the best of our possible ability, and that's going to require some work. The majority of us are already encumbered with our life making money. Therefore, we got to hire on help. And this VIP group is a great addition to your VIP team. DM me for a link to the Discord, get in contact with other group members, and be on the lookout for trading plans, all connected to macroeconomics and technical analysis. Thanks for checking out this video, guys. We'll catch you on the next one.